MSL here, and welcome to this IFRS summary video on IFRS 8 operating segments, which requires particular classes of entities to disclose information about the operating segments, products and services, the geographical areas in which they operate, and their major customers. As a standard, IFRS 8 operating segment was issued in November 2006, and it applies to annual reporting periods beginning on or after 1st January 2009. With respect to the scope of this standard, IFRS 8 applies to the separate or individual financial statements of an entity and also to the consolidated financial statements of a group with a parent. Now, with respect to these two types of financials, that is, the separate financial statements or the individual financial statements and the consolidated financial statements, there are some conditions that must be met. So for these two, the first is that any entity whose debt or equity instruments are traded in a public market must comply with the requirements of IFRS 8 operating segments. The next is any entity that files or is in the process of filing its financial statements with the Securities Commission or other regulatory organization for the purpose of issuing any class of instruments in a public market. So take note, if you are an entity that prepares either separate financial statements or consolidated financial statements and you're in the process of filing your financial statements with the Securities Commission or other regulatory organization, or you have your debt or equity instruments traded in the public market, then you are within the scope of IFRS 8 operating segments and this standard applies to you. Take note, however, that when both separate and consolidated financial statements for the parent are presented in a single financial report, then segment information would need to only be presented on the basis of the consolidated financial statements. With this out of the way, how does IFRS 8 define an operating segment? IFRS 8 defines an operating segment as follows. An operating segment is a component of an entity that engages in business activities from which it may earn revenues and incur expenses. And here it includes revenues and expenses relating to transactions with other components of the same entity. Also, any entity whose operating results are reviewed regularly by the entity's chief operating decision maker to make decisions about resources to be allocated to the segment and to assess its performance. And finally, an entity for which discrete financial information is available. Now, I mentioned the term chief operating decision maker. Does IFRS 8 give us any guidance on who the chief operating decision maker is? Yes, we have some guidance. So IFRS 8 provides that a chief operating decision maker is a function and not necessarily a person. That function, take note, is to allocate resources to and assess the performance of the operating segment. So it's likely here that it will vary from entity to entity. It may be the CEO, it may be the chief operating officer, it may be the senior management team, or the board of directors. Now take note, the title or titles of the persons identified as chief operating decision maker is not relevant as long as it is the person responsible for making strategic decisions about the entity's segment. Remember this when it comes to who the CODM or the chief operating decision maker is. Now that we know what operating segments are, let's talk about what reportable segments are, or what I prefer to call the 1075 rule. IFRS 8 requires an entity to report financial and descriptive information about its reportable segment. Reportable segments are operating segments or aggregations of operating segments that meet specified criteria. Once an entity meets these criteria, they will be required to fall under reportable segments classification, and then we need to make some specific disclosures about these segments. The first is that its reported revenue from both external customers and inter-segment sales or transfers should be 10% or more of the combined revenue, both internal and external, of all operating segments. What this means is that for a segment to be deemed to be reportable, the reported revenue of that segment from both external customers and inter-segment sales or transferred should be more than 10%, should be greater than 10% of the combined revenue of all operating segments within the group or for that particular entity. The next is that the absolute measure of the reported profit or loss of that entity should be 10% or more of the greater, that is in absolute amount, of either the combined reported profit of all operating segments that did not report a loss and the combined reported loss of all operating segments that indeed reported a loss. What does this mean? This essentially means that, take note I use the expression absolute measure, so you ignore negatives. Here we take the absolute measure of the reported profit, and it should be 10% or more in absolute terms of the combined reported profit of all operating segments that did not report a loss for the year, or you could take the combined reported loss of all segments that indeed reported a loss. Once again, the principle here is we are using a 10% threshold. So for a segment to be deemed reportable, if you are going on the basis of profit or loss, then that reportable segment will end up being a segment that makes up at least 10% or more of the profit or loss of all entities within the group or all segments within the group. The final one is that its assets could or should be 10% or more of the combined assets of all operating segments. What would this mean for you? Essentially, it means that when it comes to identifying reportable segments, you could look at three different things. It's either you look at revenue, you look at profit or loss, or you look at total assets. So it means, take note, reportable segments, it should be 10% or more of revenue of the entire group, 10% or more of the absolute profit or loss of the entire group, or 10% or more of the total assets of the entire group. Whichever one you choose depends on you, and obviously IFRS 8 allows entities to apply some level of judgment when it comes to identifying reportable segments. Now, with respect to identifying your segment, two or more operating segments may be aggregated into a single operating segment if the aggregation is consistent with the core principles of IFRS 8, if the segments have similar economic characteristics, and if the segments are similar in various prescribed respects. IFRS 8 gives us some examples of these prescribed respects. The first is that the entities could be similar in the nature of their products and services. They could be similar, or the segments could be similar in the nature of the production processes. They could be similar in the type or class of customer for their products and services. They could be similar in the methods used to distribute their products or provide their services, and they could also be similar in the nature of the regulatory environment. This could be whatever industry they are particularly involved in. And take note, these are not exhaustive, but they are there to provide guidance under IFRS 8 operating segment. Now that we know the 10 of the 10/75 rule, let's look at the 75 portion. So if the total external revenue reported by operating segment constitutes less than 75% of the entity's revenue, then additional operating segments must be identified as reportable segments. Take note here, even if they do not meet the quantitative thresholds I mentioned, which is the 10% rule, until at least 75% of the entity's revenue is included in reportable segment. What does this mean for you? What it means essentially is that, remember, what this will mean for you is that we have looked at a 10% portion, which is identify reportable or operating segments that make up either 10% of total revenue, 10% of total absolute profit or loss, or 10% of total assets of all your segments. Now, after you've identified all of these 10% segments, what we are saying here is that when you sum up all of these segments you've identified, the total external revenue by all of these segments should not be less than 75% of the total revenue of all the entities within the group. If you find out that these entities' total revenue is less than 75% of your total group or entity revenue, then you need to identify additional segments to become reportable segments until you have at least met 75% of the total. And here I'm saying that even if they do not meet the 10% initial criteria, you still need to select them. Let me give you an example. Let's say a multinational company, let me use an example, let's say Coca-Cola, is trying to identify a reportable segment, and let's say they decide to go on the basis of geographical area. So they identify Coca-Cola North America, Coca-Cola South America, Coca-Cola Europe, Coca-Cola Africa, and when they add all of these different segments, they realize that it is still not up to 75% of the total Coca-Cola revenue globally. So they add the revenues of all the continents I mentioned, North America, South America, Europe, and Africa, and they realize that the revenue from these segments is still not up to 75% of the total Coca-Cola global revenue. And take note, before they could select these entities, they should have made at least 10% of either assets, profit or loss absolute, or revenue. And they have the choice to choose which of the bases they want to go with. Now, after they've made this identification, let's say they realize that they've not met 75%, but they still need to ensure that they meet 75% to satisfy IFRS 8. So they can now go and pick Coca-Cola Australia or Coca-Cola Asia to ensure that they meet a total threshold of 75% minimum for revenue. And here, take note that whether or not Coca-Cola Australia or Coca-Cola Asia is even up to 10% does not matter. You still must pick anyone, whether they are 8%, whether they are 9%, whether they are 2% of total revenue. You still might identify operating segments until you have at least 75% of the total group revenue represented, and that is what to satisfy IFRS 8. Let me issue a quick disclaimer. The example about Coca-Cola is just hypothetical, and it does not reflect the true financial performance of Coca-Cola as an entity. So now that we know this rule, and remember that's why I couched the 1075 rule, identify 10% of either total revenue, 10% of absolute profit or loss, or 10% of total assets. After you've identified all of these 10% entities or 10% segments, find out if they are up to 75% of total revenue. If they are, you are safe. You can just report those as a reportable segment. If they are not up to, you need to identify and add additional segments to make up at least 75%, and these additional ones must not necessarily be 10% or more. Now that we know these, what must you even disclose about these reportable segments? What is so special about them that you need to disclose? The required disclosures include: number one, general information about how the entity identified its operating segment and the types of products and services from which each operating segment derives its revenue. So let us know clearly how you went about selecting them and what goods or services they are involved in. Then next is any judgments made by management in applying the aggregation criteria to allow two or more operating segments to be aggregated. Remember, I told you there are some criteria that have to be met before two or more segments can be aggregated or combined as one operating or reportable segment. So you need to also disclose the judgments made by management in applying the aggregation criteria. The next is that you need to also disclose information about the profit or loss for each reportable segment, including certain specified revenues and expenses, such as, and this is important, remember, such as revenue from external customers and from transactions with other segments, interest, revenue, and expense. Specifically, disclose your depreciation and amortization, disclose your income tax expense or income and material non-cash items. The next disclosure is a measure of total assets and total liabilities for each reportable segment and the amount of investment in associate and joint ventures and the amount of additions to certain non-current assets such as capital expenditure. The next disclosure is an explanation of the measurement of segment profit or loss, segment assets and segment liabilities, including certain minimum disclosures such as how transactions between segments are measured, the nature of measurement differences between segment information and other information included in the financial statement, and asymmetrical allocations to reportable segments. The next disclosure is you must disclose reconciliations of the totals of segment revenues, reported segment profit or loss, segment assets, segment liabilities, and other material items to corresponding items in the entity's financial statement. Also must be disclosed is some entity-wide disclosures that are required even when an entity has only one reportable segment. Some of this will include information about each product and service or groups of products and services. The next will be an analysis of revenues and certain non-current assets by geographical area. And here there must be an expanded requirement to disclose revenues or assets by individual foreign country if this is material, irrespective of the identification of operating segment. So here remember that you have an expanded requirement to disclose revenues or assets by individual foreign countries as long as these amounts are material. This is irrespective of any identification of operating segments you have already done. And then you must also disclose information about transactions with major customers. So you can see that this standard has a lot of disclosure requirements. The standard does not end at you identifying reportable segments based on the 1075 rule, but after the 1075 rule, the question is what next? You need to disclose all of these things at the minimum in addition to other disclosure requirements. Let me mention here that in addition to all of this, considerable segment information is also required at interim reporting date by IAS 34 interim financial reporting. So this has been the summary video of IFRS 8 operating segment. If you love this video, do not forget to smash that like button and don't forget to share this video within your entire network. I will catch you in the next IFRS summary video.